Tonight we're going to finish Chapter 16 Handout. And then we'll do Chapter 16 Practice Exam. And then I'm also going to send you Chapter 16 exam, and these are all due on the 14th. I guess I didn't even put the 2020 there, but hey, it's better to be thorough. Okay, so finish Chapter 16 handout, which I think there's only 2 more pages left in there. I believe that we only have the last 2 pages there. 9 and 10. And then we'll do the practice exam, which was easy. Okay. So turn to page 9 of the Chapter 16 handout, if you would. And we will finish this one up. We'll do 9 and 10, and then we'll do the practice test. Well, one of the things that sometimes companies will do is, instead of using units or hours to allocate overhead, they'll use the cost. And it's exactly the same process. But if you're looking for direct labor hours, it may not be there. It may be direct labor cost. And the reason for doing that is sometimes the cost is higher because of overtime and things like that. And sometimes those create more overhead. So sometimes it makes sense to allocate it based on the direct labor cost rather than, say, the direct labor hours. The process is exactly the same. Instead of dividing by direct labor hours, you divide by direct labor cost. And again, this is just to get an estimate of what your overhead is, so you can cost out a project or keep track of it. Okay, so at the beginning of the year, so this will be done on January 1st. You make a budget overhead and direct labor costs. So this would be divided by Okay. A little scuffed up, but it will do. Okay, so this is divided by the estimated direct labor cost. So 3,500,000 divided by 2,500,000. Okay, so 1.4. So about $1.40 per direct labor dollar. So for every dollar they spend, they're going to charge $1.40, $1.4 to overhead. This thing focused. A little bit better. Still got terrible writing. Okay, so all right, so this would be the rate, and this is what you'd use throughout the year. So what year is this? Let's say 2019. So throughout 2019, this is what you'd be using. The normal costing. And if you're a manager, you're going to be held to this number. You know, that's usually the way they do it because that's, you know, what you have control over. Okay, so job VF 33A, direct labor cost total 60,000. Times 1.4. Equals, I'm gonna put it underneath here. Okay, so 1.4 times 60,000, 84,000. So that's how much overhead would be applied to that job. And so when you're working on it, if you're a manager and you're working on this job, they would charge you 84,000 onto the job. And it's based on your direct labor cost total. Now, you might say, well, if I'm a manager, I want this to come in as cheap as possible because I want to look good. Clearly, we're profitable. The way to become profitable then is to reduce as much as you can the direct labor cost. So, and you know, and then this will be what you're evaluated on will be the cost, but based on that estimate. Okay, going down to the actual. Blue one out here. Okay, so actually, now this will be done after year end. Oh, that's a little too dark. But after year end, because you won't know this until after year end, what these are. So coming down here, these will be for actual. And usually, as a manager, you're not held to these. You say, well, why do you do them? Well, you do them because you're going to try to make adjustments for your next year, especially to see if you can make your estimates a little bit better. I did that wrong. This should say actual. I'm gonna erase that. That's a bad mistake. That should say actual total overhead. It must be actual. And then you can get the actual at the end of the year. Okay, so so similar to what we just did up here, or the same thing down here. I want to have a blue marker that's not quite so. A blue highlighter that's not quite so blue. That was better. Back. All right. So we're going to do the same thing here. So we're going to take 3,480,000. So our total overhead, actual overhead was a little bit less than we thought it was going to be. We thought it was going to be that 3,500,000 is 3,480,000 divided by 2,400,000. That's also a little bit less. All right, so we paid $1.40 up here. Down here it's going to be $1.45. So a little bit more. The actual is a little bit more. Again, we don't have a crystal ball. We don't know what it's going to be. So if we were to if we knew in the future, what it's going to be, we would put 145. But again, we don't have that. And an extra C to actual. And again, this doesn't change because this is the actual for this. On the job, you know how much you're going to pay the people. You know what you paid them. And I'm going to put it underneath there a little bit. Oh, I should have done that. Okay, let's see, 60,000 times 1.45. Okay, so calculate the over or under applied overhead for the year. Well, this would be on this job in particular. Now we don't know about the other jobs, but for this job, this is what was applied. This is what should actually been applied. So this is the actual applied. This was the estimated applied. So they under applied it. They applied 84,000. If they knew, they would have applied 87,000. So this is under applied. By 3,000. Oh, that looks terrible. They're a little too. I don't know what happened to my. I made a move. This is my new area here, but I got all this stuff here. I think we'll try this one. Hear that dog? That's my dog. That one's a better one. Okay. So that's page 9. And we're going to jump right into page 10. Page 10, same kind of thing. And by the way, it doesn't seem like, but having worked in companies where they do this kind of stuff, these meetings where they come up with these estimates and how much is applied, those are some of the most confrontational meetings there are, because all these people, their bonuses and everything else are based on them. So they really sometimes go at it. All right. Oh, this is page 10, by the way. I'm going to do both of these at the same time. Let's say hours versus cost. Okay. Okay, and so this is per direct labor hour. No, it's not. Direct labor dollar. Okay. All right, so for this job, so this is for job order. Now, there might be dozens of jobs, but this is for job order BF or 33.8. The direct labor costs for this, so they would apply overhead at this rate. Yeah, so this is what you do during the year, and when you're working on this job, you'd apply it at that rate. And if you're a manager, this is what you'd be charged for overhead. You wouldn't know until the end of the year, though, and this is actually a little bit lower, so this is going to be, they actually should apply a little bit less to it. Okay, so 400.23 times 4.1. So this is what they actually applied based on the estimate. This is what they should have applied. So this was actually over applied. They applied 1,660,000. They should have applied 1,640,000. Right back. All right, so let's go ahead and pull out the practice exam. If you should have got that in your email, is that correct? Let me make sure I sent it. Yeah, I think we got it. Yeah, okay. So covered up my screen here. All right, so let's go to the chapter 16 practice exam. And again, you can type right into on this one. I don't think there's anything crazy on this. No T accounts or anything like that. And the first one is kind of just a straightforward, how much does something cost to make by using all the costs. But the first thing is for the overhead. By the way, you can just do it up here if you want this one too. Yeah. Yeah. Oopsie daisy. Yeah. 0.0000. Okay, that's not it. Let's try this again. Okay, so this is $17. Oops, per. So $17 per direct labor hour. Seems looks out of focus for some reason. I think it has something to do with the angle, maybe. Check something here. I don't know. Good enough. All right, so actual direct labor hours 1,300 times 17 equals some number. So this is going to be the overhead applied. So when we come down here to the job, similar to what we did in the last in chapter 15. Oh, I gotta make an announcement at the end of this. All right, so down here, direct materials. $38,000. So that's, like we're making desks or something, that'd be like the wood, the nails, the paint, all that stuff. There's direct materials is just all the stuff that you use to build something. If it's bicycles, it could be tires and wheels and handlebars and whatever. Okay, so this is so direct materials 38, direct labor. And again, these two are usually pretty easy to come about because it's easy to know what you paid for stuff. How much did you pay for that wood? You know how much you paid for it. And same thing with direct labor hours. How much did you pay these people? You know how much you paid for it. You paid them. So those are usually not too tricky to do. And then the overhead. And this is going to be the applied amount. And my arrow doesn't look so good. But anyway, so that's 22,100. So this will be the total for this job. Okay. Okay, so this will be the total. Almost together. 22,100 plus 85,123 plus 88,3. So hopefully this job, whatever job it is you did here, hopefully you charge them more than 145,100, 200,000 or whatever it is. Hopefully it's going to be more than what you paid for this, because that's how you can make profit. So these are your costs, and hopefully that would be your profit would be your sale, your what you charge your customer would be more than 145,000. And if you're a manager, this is what you're going to be kind of held to. And notice that you only wrote checks for that amount, but this is going to get added on to it. So okay. Oh, one like that. I think that's some of the page 2, maybe, the handout. By the way, next week we're gonna there's actually kind of a different way of doing this that is a little more accurate. We're gonna go over. We'll wait till next week. Oh, this is one like we just did. No, it's not. It's similar to what we just did. Okay. This one will be, again, we have the budgeted and then we have the actual, and this would be done, 2018. Why different years here. So, okay, so this will be 2018. So this will be, this will be during the year. And this will be after year end. And the reason being is you may not even have all the bills for 2019 until after year end. The phone bill, for example, that's going to come in January. You're not going to know until after, the phone bill, what it's going to be and that sort of thing. So this actual, well, you might think, oh, we should use that. Actually, you can't, because you got to wait to the end of the year. And if you're doing this job in January, you can't wait till the end of the year to know if you made any money. Okay. Budgeted or estimated. And by the way, as a manager in a company, you want to try to avoid as much of this overhead as possible. So what you try doing is reducing whatever the driver is. That's kind of, if you were, if you're doing this every day for your job, it would be obvious that you don't want to have, the direct labor hours. If every direct labor hour you get charged a whole bunch of money for, you say, okay, well, let's not do that. Okay, the per direct labor hour. Let's go back. Let's color code those just for fun. Okay, normal costing. Actual direct labor hours. So that is what would be applied to this job. If you're a manager, that's what you're going to be held to. And so, you kind of look at this and see, as a manager, real quickly, you're going to know, okay, if I'm getting charged $57 an hour for overhead for every direct labor hour, I'm going to try to reduce my direct labor hours. Don't worry about anything else. Try to reduce it because that's just going to hit your budget. It's just going to hit your, and your bonus and everything else is going to be based on that. So. All right. Okay, so we're going to divide those. What color code those also? Can't see my color coding. There we go. Okay, so this would be so 2,035,000 divided by 37. All right, so actual should have been 55. And again, you're gonna say, well, why don't we do that in the first place? Well, this is after year end. You can't wait all year to figure out making money or not. Okay, so down here, same thing. Is that 77,000? Yeah. Yep. Yeah, so this would be so this is what would be the estimated applied overhead. And this would be the actual applied overhead. So they over applied it. Again, they didn't know they were over applying it, but they couldn't wait months to get the amount. Last but not least, the most difficult one of all. This is the one that most people will not get if they miss one. This will be the one they miss. Page 3. And originally I put this on an exam as easy points, thinking that it would be just be easy points, and it ended up not being that way. So I put it on now as just a kind of a you get a little deeper understanding of what we're doing here. Okay, so this is based on direct labor cost. So again, this is like pages 9 and 10. So we have our how we're applying it is estimated. Estimated direct labor cost, 1,400,000. So this is per direct labor dollar. All right, so throughout the year, as these direct labor costs are adding up, they would be applying them at that rate. So the overhead would be applied would be and so this is based on the estimate. So 1 million. All right, let's go. Okay, so it's this. You know, every one of these direct labor hours during the year, we're going to apply $4 to it. So 1,430,000 times 4. So this would have been the overhead applied. So the question is, was it over applied or under applied? Okay, well, the overhead applied $5,720,000. The overhead actual. Subtract those. And so let's see, it was 20,000. So they applied 20,000 more than they had to. 520,000. Make that blue. So they applied straightened out here a little bit. So they applied 5,720,000. The actual overhead was only 5,700,000. So the difference is that. So they over applied overhead of 20,000. So you got to get, using the can't see what I'm doing. Using the estimate, you get how much it is per hour, and do it at the beginning of the year. So January 1st, you'll have this going, and every time there is a direct labor dollar spent, $4 is added to the overhead. So during the year, they spent 1,430,000 of these hours, and so they applied that much. 5,720,000. Every time that they had one of these hours or one of these dollars were paid out, $4 more were added. And coming down here is this, how much we apply, what was the actual, and then the difference in here. And hopefully it's not too much. And this one is not too much. It's 20,000. Out of 5, almost 6 million. This 20,000 is a lot of money, but out of 5 or $6 million, it's not. So it's probably not too bad. Just a heads up. So for next class, okay. So I'm going to send you out the test. Okay, so I'll send this out later on tonight. All these are due by next week. This is so Wednesday next week is when all the stuff's due. Again, I'll send this out shortly. Just to give you a heads up, our next chapter is 18. We're going to skip chapter 17. So we're going to skip chapter 17. The next chapter we're going to cover is chapter 18. And chapter 18, one of the reasons why we're skipping this, we might come back to this one, but we're skipping it for now because 18 relates to this. 17 really doesn't. So anyway, well, I shouldn't say 17 doesn't. 17 is a different take on it. It's when you process. So we do a lot of things that are, versus making pens. You don't have someone having a, calculating how much material and labor and all that for one pen. You probably do it by the thousands. So it's a little bit different kind of accounting, but we're not going to do that for right now. It's the same as this, except that it's for big batches. Anyway, we're going to go to chapter 18, and chapter 18 is actually the more relevant of those. It's called activity-based costing. And we'll talk about this next week. But this is very big in in business. If you're a manager or if you're an accountant, activity-based costing is one of the really big things. And it has to do with a better way of applying the overhead. Yeah, what we're doing here is fine. It's what they did for years. There's still some companies that use this, but activity-based costing, if they have any kind of major cost and overhead, this is what they're going to be using. So we'll cover this next week, and this will be more applicable to most people on your jobs in the future. So we'll go activity-based costing. Well, chapter 18. We're not going to do 17 next week. We're going to start it at 18. Okay. Any questions? Okay, well, I will send out the test in by 10 o'clock. I'll figure the test out, and we'll say goodbye with our doggy. And